Hey guys, what is going on? Welcome back to the portfolio. Again, I want to thank everyone for supporting the channel. All the viewers, all the subscribers, immensely appreciate the support. Today, I thought I would do a quick update video on the covered call strategy that I've been employing with AT&T to make extra income on stocks that you already hold in your portfolio. If you guys remember back about a month ago or so, I put in capital into AT&T originally as part of a dividend capture swing trade type of strategy, essentially putting money into a stock, qualifying for the dividend, and then trying to sell that stock off after qualifying for the dividend with a positive swing trade for extra income with the dividend capture. However, I decided to, instead of putting in a limit order on the swing trade part of that transaction, start doing covered calls. Again, please take a look at all of my videos discussing covered calls, exactly what we're doing. But very simply, you're getting paid to put in that limit order instead of simply putting in a limit order to sell off a stock at a particular price. With each of these contracts, you are obligating yourself to sell off the stock at that particular price, but that's okay because you're willing to sell that stock off already at that price. But by doing it as a covered call strategy instead of simple limit order, you get paid to do that transaction. If you take a look at the portfolio, you'll see a number of these transactions. One of these call options expired today, as you can see here in the middle. $33 call sell, $5.25, which is today's date. I went ahead and put that order in just the other day, May 24th, for $21. So you can see here, if we click on this particular trade, you can see that this was a good 4-day order I put in on the 24th, just yesterday, $3 per share. Again, each contract is 100 shares. So I essentially got $3 per contract, 7 contracts for a total dividend payment of $21. Again, just put that in yesterday, essentially replicating a limit sell order in the portfolio. But instead of simply putting in a limit sell, I did it as a call sell option and got a $21 credit to the account. If we take a look at some of the history as well, you can see that I've been doing this on a weekly basis. Last week as well, AT&T $33 call expiration with that call sell on 5/18. Again, an obligation to sell that stock at $33 on or before 5/18. And you can see here, the price of the stock did not get up to $33. The option expired and I kept the $15 payment. So you can see again, $21 payment, that option that expired today. And next week you'll see another T33 call expiration for $5.25 above that $21 payment, just as you see with that $15 payment. As we continue scrolling down here, you can see another call expiration for a call sell, $5.11, $21 payment. Another call expiration for another call sell at $5.04. And again, to sell off the stock at $33, $10. And then on the bottom here, the largest call sell expiration here, T35 call sell, $4.27. They got $100 for that particular trade. So if you add all of those trades up, it's about $167, about $33, $34 per week simply by doing these limit sell orders as call options. So you're essentially doing the same thing. You are willing to sell the stock off at $33 on or before a particular date, but instead of doing it as a limit sell order, you do it as a call sell option and you get income because of that. So far, I've been doing very low risk options. Each week I go ahead and put in another options trade in. For example, let's go ahead and do one now. So for example, I'd click on trade option. Then at the top here, you can see that the sell is highlighted as well as the call is highlighted. You see next week there are options that you can go ahead and sell off. Again, on the bottom there, you can see a $33 call, 10 cents per share. Again, each contract is 100 shares. So if I were to, again, use that 700 shares that I'm using, again, on the bottom there, you can see credit. I only have 95 shares that I can use just because that other call option has not went through and expired yet. So I'd have to put this in next week. If I put in 7 shares again, just like I did last week, you can see I'd get credited for $70. So whether I sold that stock off for $33 or the call option simply expired, as the one today did, as you can see on the bottom here, $33 call expiration, $5.25 for that $21 payment there. Typically takes about 2 to 3 days before those collateral stocks are released and I can buy another call option. I can make another $70 on the account. And you can do a little bit more aggressive buys with this. I've been doing very conservative buys, basically each week putting in a separate call option call sell order, making about 7 or 8% on the stocks that I already hold in the portfolio. Again, you can be much more aggressive with this strategy. You can put in call options that you think will probably execute, but you'll get paid a lot more for those options as well. Overall, I'm looking to probably try to optimize this for a 15% rate of return using simply call options on stocks that you're already willing to sell off at a particular price. So that's what I've been doing with AT&T. But there's been a lot of viewers on the channel wondering exactly what I've been doing with the call options on AT&T. Just put out a video as well talking about Ford. With that particular strategy, I'm doing call options that have an expiration date about a year from today's date. So you get paid a lot more for those options, but there's a lot more risk with that as well. A risk that you're going to have to sell off your stock as it goes up above the strike price or the price on the call option. So, for example, if AT&T today went up above $33, I would more than likely have to sell my stocks off at $33. The other investor would buy those stocks and then sell those on the open market to make a profit on the stock as well. But a very good strategy. So far, I've been having fairly good success with the strategy. Again, doing somewhat low risk trades, making about 7 or 8% on the money I have in the portfolio in AT&T, as well as picking up the dividend as well. So overall, about 12% rate of return yearly on this strategy with AT&T. Again, I'm trying to optimize this to make about a 15% rate of return. The only caveat behind this type of trading is that if you do have overly aggressive call options and you are required to sell off your stock, more than likely you'll have very high tax consequences because of that. You'll have a lot of short-term capital gains that you'll have to cover, as well as any dividends that you receive. If you have not held those for a particular length of time, you will also have much higher dividend tax rates as well. But so far, so good with this strategy. Please let me know if you guys are also utilizing this strategy with your swing trades as well. I think moving forward, I'm going to be doing all of my swing trades as part of a covered call strategy. But again, let me know what you guys have done with your portfolios, what your experience has been with covered calls and selling options off on stocks you already have in your portfolio. And again, let me know what stocks you guys are using. I'm currently using AT&T as well as Ford, but currently looking for other options, other stocks that have a little bit higher rates of return with regards to the stock options. Typically, more volatile stocks will have a much better call sell strategy than the particular stocks I'm using, AT&T and Ford. But either way, let me know. And not to make the video too long, I'll kind of end it here. Again, if you guys have any great video ideas, any great stocks that you're utilizing in a covered call strategy, please let me know. Always looking for new stocks to add to the portfolio. So kind of with that, I'll end the video, and we'll see you guys next time.